The results of the US election are now in, and of course, the markets were loving it with huge boosts to several sectors that we've been talking about on the channel. But could there be more to come, or is this part of a sugar rush that ends very soon? In today's video, we take a look at the dark pool activity that Wall Street is up to, the big options flow, and of course, the positive gamma effects on several key markets. There's good, there's bad, and there's ugly instruments right now out there. So let's talk about the vol crush and what it means for all of us as investors and traders. Stocks, commodities, and cryptos, let's get into it right now. Well, welcome back everybody to the Daily Show where we talk about markets around the world. What a post-election launch we just saw on markets, as of course everyone started to digest pretty much a sweep across the board for the Republicans and what it means to deregulation, taxation, and everything else. It was a huge move, and we got some records that we just achieved that we need to discuss about today because, of course, the data matters, the price action matters, and the big dark pools are a huge deal. Let's talk about rallies, though. How much longer do they tend to go for when it comes to post-election runs? Well, since the 1930s, we tend to get very good runs in the markets, generally up until inauguration. Then we see all sorts of up, down, and all around markets, followed by usually bullishness after that period. But this comes back to a very important stat that I wanted to share with you all today, which I've posted over on X, links in the description down below, and that is the post-election bump, particularly for small caps. Now, we know, of course, the last time that Trump was elected was 2016, and with it, he brought tax cuts that were up in 2025. It now looks incredibly likely they'll be rolled over and even possibly improved. And who benefits from this? Well, of course, it is the regional banks through deregulation and the small cap companies, of which many in the Russell 2000 don't actually make any money. So could we be on for a bigger run? Well, if you look at the history of 2020, 2016, and of course right now, you would have to say that the Russell generally enters a very strong period for itself indeed. And this has a lot of people excited in the market, and probably rightfully so. But does the gap up equal further strength? You might be saying, well, my goodness, we just went up 5% in one day. Does that mean that we're going to see a pullback? Well, that's certainly possible. You can see here the stats around pullbacks. Generally, when we've had reads like this, they have usually weakened a little bit over the next 1 day and possibly even 2 days and possibly even 3 days. But overwhelmingly, the next month, and we've got to remember that the 2008 stat was due to stimulation by the Fed, and of course, it was not enough to quite move the market around at that point, have led into 1 month exceptional returns of 80% with a 7% median return. So things are looking very good into a seasonal strength here for the Russell 2000, something we've been discussing on the channel for quite some time. The other thing about elections is, of course, that many people came into it fearful. And as we've discussed on the channel, we've always talked about this idea that we don't need to be necessarily fearful about elections either way they go, because realistically, whether it was a Democratic outcome or a Republican outcome, we generally see overall bullishness, that post-election bump coming through. Now, we saw this really in the puts, and this is time and time and time again that we see this peak fear coming through with huge amounts of hedging, and of course, that hedging needs to be then taken away, which leads on to usually vol control. And vol control is really bullish right now. Of course, 2 weeks later, 6 months later, a very good statistic here for markets. And it does become kind of that buyer's market that we've been discussing here for a while in terms of stats. But does it get even better from here? Well, I always say whenever you get these kind of really bullish statistics, you have to then question, should I be concerned? Is this Goldilocks style period, a period of time that everyone's so bullish and it's so easy in the markets? Well, this is the thing about later cycle markets. We do tend to see everyone go bullish, and it reminds me a lot of 2021 in terms of the FOMO that I'm already starting to see appear, whether it be on X, YouTube, or any other social media. Volatility control funds will have room to buy stocks. As you can see here, it looks like they're going to be looking to buy. And Grant Hawkridge has also provided a chart here that shows long-term risk-on indicators have just absolutely blitzed it over the last 24 hours. Again, showing that risk-on is coming through the markets. If we do get dips, which you may see in a moment through dark pools, it does seem like there'll be buyers. And the stats kind of keep going from there. Whether we have extreme bullish reads or not at this stage, it looks like most stats, incredibly the SSI as well, is showing that the price returns over the next 1 year could be up in the vicinity of 11%. When it comes to risk and sentiment indicators, the Goldman Sachs Bull Bear Market Indicator is incredibly bullish. And of course, this is now, I believe, the highest reading ever after the election. Should we be concerned? Well, it's something you would definitely want to keep in the back of your mind, but it's not an initial, oh, wow, I need to sell the market or anything like that. It's just something to keep in the back of your pocket. In terms of Trump stocks, these are some of the ones that people have been kind of looking at in terms of doing well after. We've already seen huge moves in things such as Palantir. And of course, the big winner of the last 24 hours, other than regional banks, which we've been talking about a lot, has been crypto. We'll go through that in a moment. Stocks tend to go up, whoever is in the White House. And you can see here on this chart, you have to remain, in general, fairly bullish, at least at the point that we are at when it comes to this bull market cycle. Once a bull market goes for around 2 years, do we have more? Well, we've been arguing for a little while that while we probably due for a 10% correction next year in 2025, it was incredibly unlikely to happen this year. And I think that's a really important stat because when we look at it, everything kind of looks bullish. The composite after the election here looks ultimately bullish. The best 6 months of the year are here. So pullbacks, of course, looking towards more that bull side. And when you run November all the way through to April, 77% of the time, the markets are actually bullish over that period for an average gain of 7.1%. It is actually the best run statistically in the markets. This was another big one here, the September bullish stat. Basically a market that was so bullish during September that it ended up making an all-time high. Very rare for that month. And as you can see, it's only happened a couple of times. When we see something like that, you'll notice that this usually enters into max drawdowns not being that bad. And we just had a 3% drawdown. We thought it was possible to get to 4%. But during the election day and during our stream, even before we got the result, as soon as that S&P 500 market closed, literally before the election result came through, it turned bullish in structure. If you don't know why that bullish structure came through, I'd highly suggest that maybe in the future consider doing our day trading masterclass. It was an epic setup throughout Bitcoin and of course also the S&P 500, and both have led on to, of course, exceptional gains. Now, could there be more into the end of the year? Well, of course there could be, but just remember from September, it was 100% read based on the data and similar structural situations into the end of the year, and it still kind of looks that way. What about the post-election bump for something like Bitcoin? Well, it does turn out that Bitcoin does very, very well over this period, and it is a big deal. So basically, Bitcoin is usually going to run over the next 12 months if it's going into another cyclical kind of period. And this happens right about here. Is it a coincidence? Probably not. And of course, with Elon now tweeting all over X and all sorts of things going on, you have to think that the time for potentially Bitcoin is back from at least the retailer's perspective. Pullbacks, could they be met by bull demand? We'll look at that very soon. Weekly highlights, we're still in earnings season, so of course pay attention to this, guys. But let's get into the dark pool activity, and there was a lot of it. IWR, we already mentioned that there was a huge amount of whether it was buys or sells. In this case, of course, it was buys because we now see it went ballistic afterwards. We see huge amounts of dark pool transactions coming through this, but it doesn't just stop there. Of course, treasuries, as we always say on this channel, not a trade, more of an investment idea, got crushed. This is still not a bullish action going on. We're liking the level, but we're not seeing the right reactions. Again, dark pools help you to make those decisions. And then we go over to where we've seen huge transactions. Let's take a look here at CONL, which is the Coinbase 2 times long. Now, someone may have taken profit over the last 24 hours because a big trade came through, but take a look at these trades all the way through these zones here. Huge dark pool over here, which obviously we reported on the channel back early October. And what a trade it's overall been. Absolutely monstered the last 24 hours. Huge deal. If we go over to NVDA, you can see here another huge trade just came through. Could it show a little bit of the peak for now? Certainly it could, but remember the stats are still quite bullish. While you do tend to get sugar rushes for maybe 1 or 2 days, usually, as we saw, you might have a little bit of a pullback after this, and I'm sure someone was locking in profits from that huge trade they did only a few days ago. However, still, I think the overall purchases are there. When it comes to Tesla, of course, it's a huge winner in this situation. Arguably, Elon wins the most in the world at this point, and he's going to, of course, probably take Tesla to new highs. A lot of people getting very bullish on this stock. And yeah, you'll have to be watching to see what happens. We'll look at the actual technical analysis very, very soon because it is all about the levels that are going to be most important. Let's have a look at the NASDAQ. The NASDAQ getting another large trade. As we reported last week, we ended up seeing that big trade coming in near the lows here. And really the main one was the S&P. The S&P 500 triggered and the Russell triggered to give really good buys during the session. And that's why, of course, you have to, have that patience. And while you wouldn't have gotten the absolute low, as you'll see in a moment for the S&P, you certainly would have gotten some good gains. Let's talk about sector rotation. KRE number 1, solar, of course, a huge loser when it comes to the last 24 hours in particular. We'll see how bad it is. Now netting -4 over the last 5 days. So you can clearly tell that either this was a trap or a technical analysis setup coming off that island reversal, which, by the way, was netting very good gains before, of course, we got the outcome. But solar, not a winner in this situation. You would have to think the big winner is deregulation in banks and, as we said, crypto. So we'll look at that in a moment. When we go to a one-day return, wow, it even pushed through the resistance I was looking at. KRE absolutely flying, 13.41%. A lot of people very happy with this. Just remember, though, if you miss these opportunities, don't worry about it. Come from the abundance mindset, something we do here that's a bit unique to our channel. Don't chase. Don't go and, say, oh, woe is me. This is the worst thing ever. There is always another opportunity, guys. And you know what? There could be some setting up in some of my favorite assets very soon, which, as you guys know, would be gold. And it got crushed, which is not a surprise when you look at the price action, but it's come down to a very interesting level we'll have to look at. Take a look at this. It's an island reversal in the positive direction towards the markets. No matter who you are, that is a positive setup. We obviously get here a gap down, gap up in the markets, very bullish. And overall, if we do get pullbacks, then you have to think it's going to be met by bull demand. Basically, the advanced decline line going through the roof at the same time, showing a lot of breadth. When we take a look at the options levels, you can see them here. Very strong. Basically, we've moved through 58.50. Guess what that means? Positive gamma. And the setup here was actually exceptional. So there were so many reasons why 5700, which we mentioned, and 5620, which we also mentioned, were the two main zones. For me, it was that close on the day of the election. Just before, of course, we got the count in. This was massive. I mentioned this in terms of structure. We came in and we said, wow, it's very bullish in structure here. So is Bitcoin. And if we got pullbacks, which was a feasible possibility during the session, then we were going long. Of course, the rest is history, and we ended up just going absolutely blitzing, definitely causing a short squeeze. Let's have a look at how that short squeeze is playing out here. 58.50 being the big strike. Now everyone's moving on to 5,900. If we stay bullish and the market stays up, each day it does, it pushes that positive gamma situation. Obviously, maybe Wall Street might want to try to push it below 5,900 over the next 24 hours, but you can clearly tell this is the new strike that everyone's going to be fighting over. 5,900, if we close above for long enough, we would move towards, guess what, 6K. And 6K was where a lot of people had their kind of end of year target. It looks like it could come faster rather than slower. When we move over to NVDA, a good day for NVDA. Maybe not the strongest stock in the market for the session, but back above 140, that's positive gamma. And as we've said for a while, we're very bullish this stock at the moment. 150 is the current strike you want to be looking at. And then comes Tesla. Now, this was all about 260. Once the market had figured it out, if you had post-market action trading, wow, you could have done pretty well. Take a look at this, 260. As soon as that struck off, which has obviously been closed a little bit over the last 24 hours, it puts in play really trying to move towards that $303 bracket, which is obviously the 300 call wall we have here on both this week. Actually, this week's 275, but next week is 300. This is positive gamma. Arguably, as I said, Tesla, a huge winner over the last 24 hours and something, of course, we need to look at. When it comes to the move, as we talked about, as we approach that 140, 150 level, we usually see that bottoming a market. And, well, it seems like it's the same type of thing again. The move absolutely getting crushed back down. a positive sign for the markets. And most people that are wanting to be bearish right now are going to yields. So, of course, it's all about yields. I would say we're at a critical point for yields, specifically the US 10-year, guys. Make sure you watch this one on the charts. Take a look at it. It's that downward trend line. Very important. Yields do start to find a little bit of resistance around here. A good little resistance high. A lot of things coinciding. I'd like to see yields start switching it up a little bit. And I do think what happened to treasuries over the last 24 hours freaked a lot of people out. Why? Because I'm getting a lot of messages about it. People are like, oh, treasuries. I always say this. We always say this together. What do? We talk about the idea, don't trade treasuries, guys. Why? Because they're crappy to trade. They're often very difficult and you get stuffed around a lot. Instead, you should be looking at a multi-month approach or swing, or at least maybe even an investment or position base. In this case, we haven't seen enough dark pool transactions. Notice the volumes, though, that went through. There are a few concerns here, so we'll readjust for treasuries. And obviously, we now have the key level we need to see broken. 93 plus, very bullish. We'll look for the dark pool activity. What about the US dollar? Back into resistance. Not much to update here. This is a tariff-based concern for the dollar, so obviously strengthening here of the dollar for that. We'll see how this plays out because, of course, there was a short in here that went down to the first level of take profit. Then it came back up, and as it took that high, it became, well, obviously it was already becoming quite clear that Trump was winning, and the rest is history. But we're at a resistance at this point. We'll see how that plays. Now, that caused a massive crushing of gold. And this is something we did live on our show. And people asked, well, should we be buying gold? And I said, no. And you might say, well, why? Aren't you bullish gold? Well, I've actually got a stat over on X that I encourage you to go and have a look at. We'll have it in our next video, but I'd love to see you guys subscribe over on X so that we can keep pushing out content there as well. And you'll notice here we have this head and shoulders pattern, and we made that lower low. As soon as that happened, things were weakening. And guess what you're going to do? Take the distance from A, make it B, and we move down to this first bull zone. It's a very important area here for, of course, the markets. And I think it's pretty clear that we have a key level. In fact, I've had this first bull zone for a while on gold. If you've missed out on gold rally this year, could this be good? Well, it may even weaken a little bit more. It's possible, but this is a great zone. So we'll see whether we get a good technical switch. I always say try not to buy the dip unless you're an investor or position-based trader, and instead buy the V or the recovery. Good initial action. And remember, we did this together before it came down. So the key is that you're finding great zones. Let's move to silver. Silver found a little bit of support in this zone, no change of trend. That's why, of course, you always look to buy the V. And now silver's coming down to my second level, which is around 30.67. So again, no base support just yet for these metals. They're getting crushed at this stage and you might lose hope in them. But it's not about losing hope. This is where the new opportunities start to arise. So some good levels there potentially coming up. What about oil? Ooh, two minds about this. I think we're going to leave oil for today, but I brought it up. Technically, that wick looks bullish, but we'll see. We'll come back to it. Let's move over to Tesla now. Tesla absolutely blitzed it. Of course, coming off that island reversal a few days ago. It's in the middle of nowhere land. I mean, you could argue that you're going to fill this kind of gap over here, which is that 290. Some people go wick to wick, so let's say it's filled the wick to wick gap. I think 303 is definitely possible. This is going to be a fairly big winner stock moving forward. And I think a lot of people are starting to position in, including Wall Street. So Tesla's going to be a big discussion point over the next 12 months. Let's go over to NVDA. New all-time high. Pretty nice. Obviously, we're bullish on this still. 150 seems like the target at this stage. IWR, just thought I'd put in the Russell mid-caps, coming out pretty strong, 2.83%. Not as good as the Russell, because the Russell's got those deregulatory banks coming through with the KRE. I just want to mention here, if we put KRE on the charts, have a look at this thing. It's just ballistic. It's absolutely ballistic. Now, I've remained bullish on this, and I'm very happy, but wow, it's even better than I thought on the day. 13.41%. It surely will give up some of the gains, but I think this is part of an overall movement. Another huge winner, coin. Now, this one here is one of the better trades I've seen. A few people in our community certainly have this one on. We got dark pool transactions. It's a mixture of bringing data and seasonal analysis and all sorts of things together along with great technicals. I'm a huge fan of replication. We all are. This is replicable. That is absolutely sick in terms of the returns. And I cannot say I'm disappointed with this one. Absolutely perfect looking trade, and it's running hard. And obviously this 262 is going to be the kind of target. Again, if you missed it, don't worry about it, guys. There's always another opportunity. Let's go from there to the Dow. The Dow gave the signal, of course, at 42.6 that it was bullish, and it went ballistic to a new all-time high. Obviously, it's strong. US 2K getting closer to our target of 24.38. Now, this could be, of course, where we see that kind of, okay, well, that was a great run. Let's just do a little bit of a pullback for now. We're getting close. I kind of think that's where it's going for now, though. And that's what we've discussed for a while. And then, of course, we've got an island reversal on the Qs towards the upside. New all-time high, very strong for this market. A lot of sugar rushing going on here. People very bullish. But this is the thing. It's that post-election bump that we tend to get. Now, was it the same in cryptos? Absolutely. Solana, massive. Ethereum, let's just have a look at that. Massive for Ethereum. Ooh, not bad. I'm very, as you can tell, like pretty wow on these moves because I've traded a few elections since 2008. And this just reminds me of 2020, 2016 all over again with these post-election bumps. And it's nice. I think the thing that's nice about it is what we do together is we find the data, we find the logical conclusions that aren't in the media, that aren't in the random spheres of other places, and we put it together to create a great base. And I just love seeing it work. So very cool for Ethereum. Obviously, Ethereum maximalists, I guess, if that's a thing, they'll be very happy. They'll be looking for 3,200 plus at this stage. So again, is it time to FOMO? Well, this is a pretty good technical setup with a very strong move. So nice stuff there from Ethereum. Let's move over to Bitcoin now and have a look at this one. So Bitcoin, very strong, all-time high, obviously coming off that large trade volume level. Nailed it, guys. Well done. You got a great level. Of course, the two main levels we were looking for was here, and it gave great structure underneath the hood with replication. And I thought also this may have been hit. Now, if the Dems had won, I thought it would have done that. But of course, we saw that in this case, it was the Republicans winning, and we've got some strong moves. So strong moves, and I would say that pullbacks are going to be met by bull demand. Now, for the rest of the week, do we still have news? Yeah, it doesn't stop yet. Thursday is going to be the FOMC statement. We probably expect 25 basis point cut. And then we've got the press conference. That can move up and down and all around. But in general, the markets are loving life at the moment. And if you want to find out more, then remember to subscribe down below. If you want to learn more about replicating some of these setups, there were some fantastic ones, I got to say. Then check out our 7-day sale here, especially the day trading masterclass for those types of setups. You will see why it all works out. There is a money back guarantee, so you can check that out and try it basically for free in some ways. So if you also want to join us, come over to X and follow us on LinkedIn, etc. Thanks so much for watching, guys. I hope you had a good day in terms of the markets. I hope you're on the right side of the markets and not the wrong ones. And remember, if you missed the opportunity, don't worry, guys. Patience, react to predict. In this case, you were actually able to get some really nice replications after or just during the election itself. And if you felt fear and you're fearful that the market would just get destroyed or something like that, remember, we were only even looking at 1% more downside. You don't ever need to feel that fear. Always focus on the fear, harness it, and realize what are the stats, what are the data telling me, and more importantly, what is the price action telling me. Follow the momentum. It will change your life in terms of investing and trading. Bye for now. See ya.